Welcome to Market Momentum. Today, we're going to cut through the noise and look at what's really happening. We're talking about a hidden force that's propping up the US dollar, why stocks seem to be totally ignoring all the scary headlines, and what the charts might be telling us about the next big move for both crypto and gold. So, let's get right into it. You've probably heard warnings just like this from some of the biggest names in finance, right? And they create a ton of uncertainty. The message is pretty clear. A small visible problem could be a sign of much bigger issues lurking just beneath the surface. But the real question is the market even listening? Okay, so here's how we're going to break it all down. First, we'll look at this hidden force that's messing with the US dollar. Then, we'll see how US stocks are somehow defying all the doom and gloom talk. After that, we'll check in on crypto, which is at a really precarious spot. And we'll finish up with a solid strategy for precious metals. So with all this nervousness in the market, there's a really powerful, kind of lesser-known thing happening in the background. And it's having a huge impact on the strength of the US dollar, even while a lot of people are predicting its downfall. So what is this hidden force exactly? Well, it's this proposed idea. Some folks are calling it a genius act because it's pretty clever. Basically, it's a concept for a law that would connect the brand new world of crypto with old school US government debt. And what that does is create a powerful new reason for the entire world to buy US bonds. You can see how this works in 3 simple steps. It creates this powerful feedback loop. You want to issue a stablecoin. Great. First, you have to buy US debt. This instantly creates this massive built-in demand for US treasuries, which at the end of the day just fundamentally strengthens the dollar's place in the whole global financial system. So here's the bottom line. While you hear all this chatter about the dollar's decline, a concept like this could quietly make it even more central to the future of digital money. You have to admit, it's a potential masterstroke for reinforcing America's economic power. So while that's going on with the dollar, the stock market is dealing with much more obvious fears. But what's so interesting is that the reality on the charts, well, it's telling a completely different story from the headlines we're all reading every single day. I mean, these are the kinds of powerful, frankly frightening, warnings that can make investors just panic and sell everything. When a leader of that stature speaks, you know the market is going to listen. And a lot of times, it overreacts. And this right here perfectly captures that disconnect. On one hand, you've got these dire predictions, and on the other, you have the market just showing incredible resilience. Despite all the warnings, the major indexes have found their footing and are moving up again. It's a classic case of watch what the market does, not what people say. Now, if we zoom in on the S&P 500 chart, we can actually see technical signs that strength is coming back. Prices are getting back above those key trend lines, those moving averages. We're also seeing something called positive divergence. That's when prices hit a new low, but the momentum indicators don't follow. And that often signals a bottom is in. So yeah, it might still be choppy, but the underlying trend looks like it's turning positive. And the Nasdaq? It's showing even more strength relative to the S&P 500. And why is that? Well, because it's so heavy on tech stocks, it's kind of insulated from all the drama in the banking sector that has so many economists worried. And that makes it, a potentially safer place to be within the stock market right now. Okay, let's switch gears and pivot over to the crypto market. It has been facing some serious headwinds lately, and right now it has reached what you might call a make-or-break technical level. The total crypto market cap has pulled all the way back to a super critical support level, this long-term rising trend line. Now, this could be the spot where we see a bounce, but you have to be careful. Caution is absolutely the name of the game here, because a break below this line could mean a lot more pain is on the way. So with all this uncertainty and the chart basically balanced on a knife's edge, how should you approach the crypto market right now? Rushing in could be a huge mistake, but staying on the sidelines could mean you miss a potential bottom. Okay, so the most crucial point here is patience. Seriously, the analysis really suggests just staying away from those low liquidity weekend sessions where you see all those weird pump and dump schemes. It's so much smarter to just wait for Monday. Let the market show its hand when the big institutions are back trading. And no matter what you do, disciplined risk management with stop losses is it's non-negotiable. And finally, let's take a look at precious metals. Gold in particular has been on an absolutely incredible run. And it's left a lot of investors wondering, okay, what do I do now? I mean, after 8 straight weeks of gains, that's a powerful rally by any standard. Investors are all asking themselves that critical question. You can feel the psychology shifting. The fear of missing out, or FOMO, is being replaced by the fear of giving all those hard-won gains right back in a sharp correction. This is a really disciplined strategy, and it's designed to protect your profits without you panic selling on some minor pullback. Look, one down day can just be noise. But 2 down days in a row, especially during the high-volume US session, well, that's a much stronger signal. And even then, selling a portion of your holdings lets you lock in some gains while still staying in the game, if the upturn kicks back in. And you know what? The same basic idea applies to silver. The key difference, though, is that its price swings can be way more dramatic. That higher volatility makes a disciplined, step-by-step approach even more important, just to avoid making emotional decisions. This famous quote just perfectly sums up everything we've talked about. Your number one job is always capital preservation. If you can avoid those big losses, the gains really do tend to take care of themselves over time. It lets you stay in the game and grab those future opportunities. And that leaves us with one final thought to chew on. We've seen this really clear disconnect between all the scary headlines and how the market's actually performing. It kind of forces us to ask, what really matters more? The story everyone's telling, or the price action you can see right there on the screen? Thanks so much for joining us. We'd really appreciate it if you'd subscribe and like so you can stay up to date with our latest analysis.